Good morning. We are now on Module 3. We have to discuss the donor's tax, one of the transfer taxes. So, we have the learning objectives of these topics. We have the concepts of donations, create a schedule of net taxable gifts, and tax due. So, what is a donor's tax? It is a tax on donation or a gift and is imposed on the gratuitous transfer of property between two or more persons who are living at the time of the transfer. It shall apply whether the transfer is in trust or otherwise, whether the gift is direct or indirect, or whether the property is real, personal, tangible, or intangible. So we have mandatory requirements by the Bureau in order that transfer will be accomplished. First, we have the duly notarized original deed of donation. We got the TIN or taxpayer's identification number of the donor and the donee, the proof of claims for tax credits, validated returns on original official receipts and deposit slips as a proof of payment for no receipts or return through filed by BIR. A duly notarized original SPA or special power of attorney for transacting party if person signing is not one of the parties to the deed of donations. We got a certified true copy or the original transfer or condominium certificates of title of donated property. We got also a certified true copies of the tax declaration at the time or nearest to date of transaction issued to local assessor's office for land and improvement, and certifications of new improvement issued by the assessor's office if the property has no improvement, because sometimes there are improvements on the property donated and there is a problem in the future in the authentication of the donation. Then for a personal property being donated, you have to note on the proof of validations of shares of stocks at the time of donation. So, the shares of stocks not listed or not traded, we have to note on the latest audited financial statement of the issuing corporation for the computations of the book value per share. But for listed or traded, we have to note down on the price from the Philippine Stock Exchange or the PSA for the price. The latest fair market value published in the newspaper at the time of transaction. If these are club shares, the price published in the newspaper on the transaction date or to the nearest transaction date. We have also the stock certificate, the proof of validation of other types of personal properties, proof of claims, deductions, a certificate of deposits, investment, indebtedness, tax for cash or securities donated, a certificate of registration if it is a motor vehicle. Also, we need to know some additional requirement as a duly notarized special power of attorney if the person transacting or processing a transfer is not a party to the transaction. We need a certification from the Philippine Consulate if document is executed abroad. Location plan, vicinity map issued by the local assessor's office if zonal value cannot be readily determined from the document submitted. Determine a certificate of exemption or BIR rulings issued by the commissioner of his to his authorized representative if tax exempt is if the donor is tax exempt for such other documents as may be required by law and rulings and regulation. The tax rate applicable for a train law is 6% with computed as a basis of total gift, total gift in excess of 250,000 exempt gift may be made during the calendar year. So take note, in exceed of 250,000, it is subject to a 6% as per train law. That is, we back transactions from 2018 to the present. Note, when the gifts are made during the same year or calendar year, but on different dates, the donor tax shall be computed based on the total net gifts during the year. Net gifts means to say the gross gift minus allowable deduction according to the tax code, and that is the total net gift. The relationship between the donor and the donee shall not be considered on this train law. Does not distinguish donation made to relatives or donation made to strangers. So no stranger requirement, no stranger components now. But as of December 27, 2017, the tax rate is different. We have for 100,000 exempt, for more than 100,000 is 0, but not to exceed 200,000 we have 2%, and then we have not to exceed $500,000 we have 2,000 plus 4%, and so on and so forth, up to we raise the 50% for 10 million above. Note, when the gifts are made during the same calendar year but in different dates, the donor tax shall be computed based on the net gift. Donation made to a stranger is subject to a 30% of the net gifts. So by 2017, the stranger is considered here, and the donation to a stranger is subject to a 30%. So the regulation, as per first slide, that is due for non-stranger, for the family, but for stranger it is 30%. A stranger is a person who is not a brother, a sister, whether by whole or half blood. So maybe prime family or a second family, spouse, ancestor, or lineal descendant. A relative by consanguinity in the collateral line within the fourth degree of the relationship. That is, he who is not a stranger. If these are the components, they are not stranger. They are subject to what we call the 2%, 4%, and so on and so forth. But if they are considered to be a stranger, then the gift will be subject to a 30%. Now, for July 2892 to December 1997, so to 92, so these are now another percentage that will rise, so we will be using this if donations are made within this area. Donations made to stranger is subject to a 10%. If in the last day, the recent date, we have 30% now on the effectivity for 1992, so we are going to have a 10% net gift for a donation to a stranger. And effective January 16, 81 to 1992, these are now the percentage again. 2.5, we have 3%, 6%, 9, 12, 15, and 18. And then, we go up to 40% of the total net gift. So donation made to strangers shall be either the amount computed in accordance with the preceding schedule or a 20% of net gift, whichever is higher. So if the previous slides it is computed as on the 20%, 10%. Now we are going to compute here for 20%, but we have to consider on the whichever is higher. So whatever be the higher percentage on the first and to this one, we are going to consider the whichever is higher. Stranger is also a person, so on and so forth. And descendants relative to consanguinity, collateral within the fourth degree of relationship. The same definition as that on the first as of the present period. What is stranger? And then who shall file? The donor's tax return shall be filed in triplicate copy by any person, natural or juridical. Natural means to say it is a person. Juridical means to say maybe a corporation, a partnership, venture, a resident or a non-resident who will transfer or causes the transfer of property by gift or by gratuitous act, whether in trust or otherwise, whether the gift is direct or indirect, and whether the property is real, personal, tangible, or intangible. The taxpayer who are filing this will be using 1800s, 1800 or 1800s are excluded in the mandatory requirements using the BIR forms section 2 RR 9-2016. So the donor's tax returns shall be filed within 30 days after the date of donation. The return shall be filed with any authorized AAB of the RDO having jurisdiction over the place or domicile of the donor at the time of donation. If there are no legal residents in the Philippines, with the Office of the Commissioner in Internal Revenue in Quezon City, in case of gift made by a non-resident alien, the return may be filed with RDO 39 with the Philippine Embassy or Consulate in the country where he or she domiciled at the time of donation. A separate return shall be filed by each donor for each gift made on different dates during the year, reflecting therein any previous net gift made in the same calendar year. One return shall be filed for several gifts by a donor to the different donees on the same day. If the gift involves conjugal community property, each spouse shall file return corresponding to his respective shares in the conjugal community property donated. This rule shall likewise apply in the case of co-ownership over the property being donated. When the return is filed with AAB, taxpayer must accomplish and submit BIR prescribed deposit slip with the bank teller with machine validated as evidence of payment, and it should be stamped by the AAB for filing the return and payment of the tax respectively. The machine validation shall reflect the date of payment, amount paid, transaction code, name of the bank, branch code, teller codes, and initial teller. The bank debit memo number and date should be indicated in the return for taxpayer paying under the bank debit system. Payments may be made through e-payments channels, online facility, credit, debit, prepaid cards, and mobile payments. Transaction covered by one, deed of sale, exchange, donation involving one of three properties. The taxpayer cannot avail of the fast lane pursuant to revenue memorandum as amended. The payments amounting to 20,000 and below shall be paid in cash, while payments above 20,000 shall be through manager's check or cashier's checks. At the time of filing and payment vary depending on the row applicable of time of donation. So this is true for our donors tax, and our next topic would be introduction to business tax and value added tax. So you have to do all activities on each of the module and pass within the given date. Always stay safe and thank you.